Hey everyone, welcome back to another 31-minute podcast. Very special guest today, Steve-O.
Morning, mate.
Hello.
Morning, guys. How are
We've
you?
had many people chasing us saying, when are you getting Steve back on?
Here I am.
Very busy.
I haven't been hiding.
Very busy man. George
Good morning.
and Jason.
Morning.
Morning, Jacko.
Morning. It's nice and early. It's 6 o'clock on a Sunday morning. So thanks for coming. There's a lot of things that we can talk about, but let's talk about the first one, inflation,
Yep.
and what that actually means.
Yep.
So I'd really like to get out of this what your view on money is, where it's going. There's probably other questions that these guys might want to ask you about, like investing. I'm sure Jordan has thousands. But can you talk about inflation quickly? And
Sure.
how does it affect the average person and where is it going?
I think the most important thing to understand is what's money. So what creates inflation? So money is nothing more than an exchange mechanism. Money has to be portable. Money has to be divisible, meaning you can split it up, and it has to be recognizable. So you and I both have to recognize it. So just wind back a little bit as to how this is the hyperinflation, how it occurs, and then it'll give you a better understanding of money. So back in the 16th century, Western Africa used to trade with glass beads. So that was their form of money. They were very hard to
So like
produce.
everyone had glass beads or something?
Oh, well, it was the thing that they would transact. Property, gave you the understanding of this meant this much, an understanding between parties, and they were very hard to produce. So they would buy and trade spices and all sorts of things with glass beads. Land, everything became tradable with glass beads. When the Europeans came over and colonised Western Africa, they realised they could produce these glass beads.
Like counterfeit.
So they got better and better and better at it, and they brought them over in literally ship hulls over, 100 years sort of thing. Like over time, they didn't just rush them all into the place. And they ended up owning all the land and all.
Really?
Yeah. So that's counterfeit, right? Everyone understands, that's counterfeit. I get they stole off them. Well, what do you think happens when the central bank just prints money?
Same.
They're stealing, but it's legalized. They're stealing off you. So I could go down the rabbit hole of what that means and how that is technical theft, because inflation is theft, because it's deteriorating your buying power for the cash you have in the bank, right? So it's stealing off you.
Can I ask a quick question? When John Howard was in
Government.
We had like a surplus of money. Like he used to run the country quite well, I think.
Yeah.
I was not too young, but I didn't really care.
Yeah.
So, but now we're like billions in debt.
In deficit.
How does it go from that to that? Mismanagement is probably one. But
Mismanagement is one. I mean, we've been through a pretty tough time with COVID, right? So right now, it's a little bit hard to throw any real government under the bus because we're all in this same boat. Like internationally, everyone is in this same boat. Australia manages it pretty well.
Are they trying to crash the world's economy to bring in digital currency?
No, I don't think so. No, I mean, it really just comes down to the fact that they've mismanaged the volume of. You've got to wind it back to what happened just before COVID. Everybody thought what was going to happen in property price. They were going to halve, they were going to crash, everything was going to fall over, nothing was going to work. Cars are going to be worth nothing. Well, the opposite has happened. Okay. So back then when they really started cranking in quantitative easing, meaning they're buying bonds with government money, just producing money.
What does quantitative easing mean?
It means that they print money. They pump it into the economy. So they buy bonds, they buy asset classes and put money into the economy. So and they hand it out. So money just gets handed out and it ends up in the hands of few.
So what happens if they didn't print the money? So we're in a world of hurt because of all the money they printed. They just kicked the tin down the road, and now here we are with a big issue on our hands.
Yep.
What if they just didn't print it back during COVID and we just navigated our way through it?
It would have been pretty difficult because no one was working. So everyone would have lost their houses.
That's why.
Oh, really?
That's why.
Well,
they had to
how
print
would
the
you
money.
pay? You think about the amount of small businesses who were it wasn't great for everybody. There was this massive imbalance. So there were people who would have, the small business that needed stimulus, that needed a handout to keep their business going, to pay the staff, and those staff need to be able to pay their mortgages. I mean, they just went too far.
So who controls the printing of the money? Does someone just wake up and go,
Fed,
okay, let's go
the Fed,
print
which
money?
is actually not federal, but it's like a collection,
Like a cartel.
like a cartel that happened.
Don't
back
get me
in,
started.
I don't even know when the year was, but it's not federal. It's called
Right.
Fed, but it's not. It's a cartel who decide what do and don't happen with the quantitative easing and the volume of money that's put into the economy.
So the little ferret that gets on TV that's the head of the RBA, and he sits there like, we're putting interest, but everyone's saying he's doing the wrong thing, putting the interest rates up.
Yeah.
So sharply, like so many people are. I see.
Well, they shouldn't have gone down so far.
Right.
The problem is they shouldn't have got to where they were.
Did they allow that to happen?
Yeah, it was, again, that's the easing part.
Right.
We've got to make this more affordable for people. We've got to make this more affordable. So what they were trying to do was bring down interest rates to stimulate the economy, to make people spend money. So back to money.
Now they're doing the opposite.
Now they're doing the opposit because, and that's the problem. It's the ebb and the flow. There's never a
Why don't they just keep
consistency.
interest rates at 3% then?
Well, it can't work like that because that gets back into, again, what is money? They've got this increasing supply. Your money in your bank is becoming worth less. Take an example of Bitcoin. There's 21 million of them. It's controlled, but it's infinitely divisible, meaning you can divide it into multiple pieces. Okay, so this is a hard rabbit hole to go down.
Just hang on. My simple mind.
Yeah.
If you just kept it between 2.5% and 4%, and that's all that happened, wouldn't that not fix everything?
Not really, because you're not controlling. You've got to control inflation, and
Right.
the money ends up in the hands of few. That's what I was sort of alluding to before. That money ends up in the hands of few. So the Europeans coming over from West Africa, even though that was counterfeit, they had all of this money that ended up in the hands of few. So then they can own everything.
Right.
Right.
Oh, I
so
see.
yeah. So the balancing act is stopping certain spending.
Okay.
You can't just give the masses money,
Right.
which is sort of what they've done. This is what happens. You just hand it out, and people don't
So just
understand what this
spent
thing is.
everywhere.
Well, they don't understand what this thing is. What is
Yeah.
this thing? I'll just spend it, or I'll
Sounds like my
invest,
daughter.
or I'll invest it. Meaning, I don't know what I'm investing in. So there was when during COVID, there was never more accounts opened up for stock trading, right? So the $1,000, $2,000, all the money that people were getting, they were, I'm going to make money with it, but they don't know what they're buying. So they're buying Tesla stock. Not there's anything wrong with Tesla stock, but it got to the point where
So they just didn't know what they were
they
doing.
don't know what they're doing. And so Elon Musk is saying, don't buy my stock. Like, it's too much. You're paying way too much for it. They bought more. People think, he's tricking us. Let's just keep buying. We love Elon. Elon's great, genius. But, the stock was never worth the share price that it got to because it didn't make any sense. So again, that gets out of hand because now that ends up in the hands of few, right? So you've got Elon Musk and I'm using him as an example, and the top tier of a few people who end up with all the money, right? So you can't just hand it out is the answer to the question. So they have to have interest rate rises and falls to sort of
Stimulate
control
pullback,
and
stimulate
simulate
pullback,
pullback
yeah.
to try and keep inflation in a range.
Right.
And the reason that so you can say inflation is theft, which it is, and there's all these reasons why inflation's bad, but we actually require inflation for the purpose of we buy things today on future money. So the $1 million someone pays for a house, they don't have it, but that's okay because their income will increase in time. The property will appreciate in time. It'll go up in value, inflation. But what that's really done is it's just deflated debt. The debt hasn't changed because debt is the money. So when I lend someone money, it's real money. I
So
don't
does
borrow it.
inflation make property go up?
Well, that's what I'm alluding
Is that
to.
what you just said?
No, that's what I'm alluding to.
Right.
The key is. So yeah. So
So inflation is inflation necessary?
100%.
Yeah.
You wait to see what happens when we start having no population growth in the next 50 years, not enough population growth, deflationary pressure, and everyone goes, this system's broken.
Mm.
So, but it's got to be controlled. But my point, so getting back to my point, and you asked the question then, that was the point that I was going to make, was that rather than being upset with inflation and saying the world's broken, you've got to be on the right side of it. So what do I do with this? What do I do with these glass beads that are worth nothing, because that's what we're trading in? It's money, but it's glass beads. Where do I put it that is going to match inflation?
Where do you put it?
Property is the best, easiest, because everyone's in it. I mean, there are other things. Thank you. There are other things. I mean, you know, Bitcoin technically is the perfect form of money, but you know, there's all these reasons as to why it sort of doesn't work and does work. I mean,
But that comes back to what you always say about do what you know.
Do what you know.
So don't go off and buy. I know a lot of people lost a lot of money on Bitcoin.
Yeah.
But they
because
some people borrowed to go in there.
Yeah, because the thing about Bitcoin is exactly that. Is it the perfect currency? Absolute. Has it got every benefit you could imagine? Absolute. What's it worth? Who knows? Because people, economists, professors, you know, people who study it will say it's perfection. So now people just buy it without an understanding. The price gets pushed.
Do you have Bitcoin?
Yeah.
Yeah.
It gets pushed to an unrealistic level that doesn't make any sense. Will it catch up over time? Yeah, it will, because it's infinitely indivisible. So even though there's only 21 million of them, you can transact in it. So if the three of us had it, I'll just give you an example of it. If the three of us have money in the bank, or we have Bitcoin, if the central banks produce money, it goes into Jackson's account, let's say, but the three of us don't have any more. And if they keep giving it to Jackson, ours has gone down because now he's got so much he doesn't care. He can just buy things with it. But with Bitcoin, if they divide it more, we've got more. We've all got more. You see, so you go, that's a system. Why don't we use that?
So what's stopping Bitcoin becoming our main currency? I know the banks wouldn't want that, but
yeah, because there's a few things that I see as the problem. One is that Bitcoin, it doesn't. If you look at, have you got Bitcoin?
no, I don't have Bitcoin, but I have a couple of other.
Okay, but
coins.
You see the fractionalization of it. Doesn't make a lot of sense. 0.00 point was, you know, what does that actually mean? People want to know they got one of something. Like Matt doesn't understand it. So if I said to Matt, you got 0 point, he go, what? So I say you got three of them. Yeah, I got three. Yeah, that's the problem. People don't get it. People don't get that this indivisible nature of it. So they need to break them up into something that makes sense. So 1/1,000,000th of them is one.
Yeah,
et cetera, et cetera. But again, then that means centralization. That means organizing the whole process, and that requires sort of government or banks. And the purists say, well, if you don't understand it, don't be in it. This is our system, sort of thing. So,
so are they bringing out a CDBC?
What?
Central bank digital currency. Are they bringing them out? Like, where's that up to?
Well, we're nearly digital now. I mean, the amount of cash we've got is not that much in the marketplace. And you know, in China, RMB is all digital. You can't go and get in a cab and pay with cash.
It is funny. I said to Tara, just get some cash, and she's like, I never have cash.
Yeah.
I don't even carry a wallet anymore.
Yeah. I do.
Do you?
Yeah. I don't have cards on my phone or anything.
Yeah, right.
No, I just have the card. I just like it. Yeah. Tara's always like, put it on your phone. I'm like, nah. I feel like I'm taking the mark of the beast.
We're pretty much there now. You know, you think about it, we're pretty much there. Yeah. There's few people like you who will do that. Most people just use a card. I use a card.
Yeah.
I can track it. I know what's happening. Easy for your accountant to say what happened with that. It's, you know, it is easier from that perspective. So I don't, you know, the old big brother, you've got to understand, they're not there trying to break us. They're there trying to maintain, you know,
Control.
the interest rate thing. They're trying to maintain, you know, a couple of % of inflation, which sort of works because it gives you incentive to produce. You know, inflation does something else as well. As property and other assets go up in value and your money becomes worth less, well, what do you want to keep it for? as an investor, you want to invest it into something. So you want to use that to hand it off to produce something else, a business or a property or whatever it may be. You don't want to sit on cash.
So is there a big crash coming?
Who knows? We don't know that.
Come on, you know everything.
What's your gut feel?
Yeah, what's your gut feel?
No.
No?
They're going to hurt. Like what the lag in interest rate is so significant that by the time they see what they've actually done, they'll start turning it around. They'll start turning interest rate around.
Do you think they'll start to lower it again?
For sure.
So what's
in the near future? I mean,
12 to 18 months.
You really?
Yeah. So I'd say play this back in 18 months. I could be wrong, but I think there's no doubt. They're putting on so much hurt. There's so much debt. They've lent so much money. The people they're hurting are, unfortunately, the mums and dads who have gone and been encouraged to buy a house and land package or a home that has no income. They're the ones that are really getting hurt the most, 1/3 of people.
So what does that person do if they are that person that's hurting?
Come and see Steve for a loan.
No. Right back from the start, the ideal situation is you've got to go back to excuse me, you've got to go back to what you and I have spoken about before, which is you can't be so indebted in your own property to start with. You can't. When you're in there, that's hard. When you're already in and you're already indebted, it's hard to just, and it's human nature. I want that house. I want the bigger one. But ideally, you should only stretch yourself into your investments. Your house should be a simpler investment, so it doesn't cost you as much money.
Stretch into investments and then a modest home.
A modest home. And
It's
then
interesting.
And then with the investment.
Well, I'm happy to do
your
whatever.
modest
I'm
home?
just about to ask Steve. Yeah.
Matt's modest home.
Modest home, yeah. It's half a suburb.
So if somebody couldn't afford their repayments, should they convert to interest only, or should they move out and rent it and try and live in a different suburb with a cheaper rent or something just for now?
Depends on their circumstance. Again, going back to what we were just talking about, what's inflation? What's one of the best, safest hedges is property. So ideally, that means it's got a time horizon, and you need to hold it because it's going to get better, right?
Yeah.
There's three. You got three partners: history, bank, and government. So you got three partners. They're pretty good partners. History is, they've always gone up in value. Oh, things are different. This is going to change. Well, you take snapshots over the last 300 years, and everyone will say the same story in the moment. When they're in the jar, they can't read the label. But you move out of this, and as soon as interest rates start to tick off, it will become normalized, and it will become, they will just tick up again.
What about someone like myself who has no interest in property at all? I've had investment properties and things that just do my head in. I'm just not interested. If I had a good house and businesses, is that better?
Yeah. You got to live somewhere. It's different for you.
Yeah.
That you're not.
I don't have much
I know
debt.
your circumstance intimately, right? So it's not like you're stretched going, I'm borrowing everything. So then it's okay.
Yeah.
So it's just the numeracy is different. The dollar value you're talking about is different to the person who's asking, who's got a $500,000 house or a $600,000, $700,000 house, right? You got to understand they're more stretched at that level. They're much more stretched at that level than you or I might be at. So that's really stressful for them. That's like, you sort of go, it's only 600 or 700. It's a lot when you break down and something on that. Someone asked me something yesterday. Oh, what's that worth? What's this worth? To work out what a house is worth is actually really simple because I do it every day. You just look at who lives there. What's their average income? Now what's their affordability? That's the house's worth.
I was just about to say this. Let's talk about you for 1 second. I'm not going to say numbers, but I know how much your house is worth, and it's a lot of money. And are you happy living there, or do you want your money working elsewhere? For how do you?
It's unproductive.
You've got a.
It's really unproductive waste of money.
Is it?
Yeah. Oh, of course.
Well, okay.
But you got to live somewhere.
So,
but hang on, let's just unpack that for a second. You've got to live somewhere, okay? And I sort of like where I live. I like the people that they're my friends, and so if I move, I'm just going sideways.
So you live in the probably the most expensive suburb in New South Wales, but you live there. You just like living there, but you can afford it.
Yeah, but my friends live around me, and I know, like, we go for dinner nearby. We don't, you just get in a rut.
So are you buying investment properties, or are you focusing on business? What are you doing?
Both. So for me, what I do is I allocate as funds come in. Again, you've got to remember, job first. Got to work.
So talk me through your setup. So you have business, and then you'd lend money to people and things like this. Doesn't matter what it is, but you have your income coming in.
Yep.
And then you I suppose you own your house outright, but it's like you. So when you have money, let's say you have $1 million, and what do you do with it? Like, do you go?
If I
what do you do? So $1 million comes in.
$1 million comes in. It'll. The first thing I'll do is just sit it against offsets of loans that I'll have. So if I've got a loan for a property for, let's say I've got one for $1 million, that $1 million will just go into a bank account. I'll tell the bank, set that up as an offset, and that'll just sit there. I don't pay interest.
And then what do you look for? Are you looking
opportunities?
Are you looking? Okay.
Because the most important thing, because that's a really good point. The really good point. The most important thing is to have that flexibility, because the second you take that $1 million and pay off that asset, that's all you got. You got the one asset. We've had this discussion before.
We have discussions every day.
I know.
I'm really interested to know. I've probably never even asked you this properly. So you recently bought a couple of units in Point Frederick, and then why did you buy those? Like, what were you looking
value.
for something? Was you what
was my motivation?
Yeah, because obviously you have other businesses. Like, did you? So let's say you have X amount sitting over here. Do you just leave it there until you see something? Do you?
No. Okay. No, I've got a very structured mindset around it, and that is that the properties, so all the ones I've bought off you, they're inflationary hedges. So for me, the money, I don't know what's going to happen. I don't know how quickly inflation is going to get away from me. I don't know whether it's going to happen tomorrow, next week, next month, next year, but it's going to happen. So that's just my hedge. So rather than, if I sit on money and think, gee, I'm going to hold this and I'm smarter than the market, I'm not. I'm not smarter than the market. So I put that cash into things that will go up in value.
So what I was saying before, yes, I want to keep going on this. Yeah. So when I was saying before, you put it in an offset account so you have access to it.
Access.
Right.
Yeah.
So you just don't leave it sitting there.
No.
So, and then do you hold much in your living, like, bank account? No. Like, do you have, like, I don't know, $50,000, $100,000? Like, do you just in your everyday living? Because you obviously $5,000. So you obviously.
Why we don't need 50? It'd make me throw up.
I don't know. So you obviously have. Do you see your life as business income? So you have income, and then as your income grows, or you get a pot there.
Yeah.
Do you move it to one of these offset accounts?
Oh no, I'll buy assets. So what I'll do is, as money comes in, and my focus is my business. My focus is growing the businesses that I have, so they keep producing money. That's my focus every day.
So that's your number one focus: income flow.
Number one. The people who say, "Oh, I'm now a full-time property investor," or, you've just given up. You've given up to me.
So number one,
you don't have big enough goals. If your goals are too small, you've got to have money coming in. It's got to be flowing in. I mean, unless you're a property developer, that's your only business, and you've got a structure around that. Yeah. But not just a bit of fun. I've built a few factory units, and now I'm taking 6 months off, and now I'll watch the market and do it again. That's not a business. That's retired to me. That is retired. And I deal with plenty of people who I lend money to who do that. It's great because they're I think in their mind, they're sort of a bit retired. They'll buy something, they'll build it, they sell it, they stop, and now I'll wait for another one.
So really you're an athlete every day, going to work, doing your sport, getting your income.
Yep.
Putting it over here, making it work for you. Because I hear you all the time.
I don't do as many hours a day.
Yeah, you do.
I've got a mate of mine who tells me that I do too many hours.
Trying to teach him about time management. But there's I hear you all the time saying you want no money in your account.
No.
All the time. No. You say, in one time I rang you and you said, I've got a couple $1 million just sitting. I just get it out of my account. And I'm like, what? And you're like, I just got to get it out of there. It's driving me nuts just sitting there.
Because in my business, in what I do, I've got to utilize money. So that's a dead spot. So if I'm sitting on cash, it's dead. It's like the way that bank went broke. the other day.
Yeah, what happened there?
Well, they were lending predominantly to a lot of the VCs and startups, and the startups.
This is the Silicon Valley.
Silicon Valley. They were in startups, right? And they had huge inflows of cash coming into their business, but they were, in my business, risk to reward, right? So the more risky the loan, the more the interest rate. The safer it is, the lower the interest rate. They were profitable because they were lending money to these companies that were quite risky. But people liked the returns that bank was giving. So they were getting tons of money in. Quite recently, apparently they stopped producing term sheets for these deals, which meant that cash, let's say you had a business that you were borrowing money off them and it was an IT company, but you've now got 100 staff and you've got cash in the bank. So like I was saying, you borrow the money and then you put it back in the account as an offset so you can use it, right, to pay payroll. Well, if they stop lending to these people, right? And so to take one company as an example, they needed to borrow more money. They said no. And so that company went, whoa, we might not be able to make payroll, took the money out of their account and put it in another bank. Then they had a run on the bank, right? So now people started taking money out and they were advised by, take money out. These guys are not lending, the wheels are falling off. So the train started stopping on them. Then what they did was so go back to talking about having too much cash. What they did was they were buying bonds, as everybody does. You buy bonds, you buy assets to keep a return on the dead money, that's in your account. So they do that on scale. The problem is that as interest rates rise, a bond is worth less. On the books, it looks like they have $200 billion worth of asset because they rate the bond at maturity, which it will if they can hold out. If you've got to run, like if you've got to run and your clients say, I want all the money back, you've got to sell the bonds or your assets today. Well, they're worth half of what you've got on the books. So it's not a true figure to say that they're worth $200 billion.
Right. I understand.
Yeah, they have to sell today. They get $50 billion and they owe $100 billion. Boom, wheels fall off.
So how didn't they read that forward? Why did they stop lending? Because that seems like a big alarm bell to me.
No. Okay, so they shouldn't have been like why interest rates where they are. They shouldn't have been where they were. So they shouldn't have been lending. They were getting so confident and making so much money for people. In my space, I could be more confident and make more money for people, but I won't do it. I'm very strict with my. You know what I do. I'm very strict with my parameters, and I won't take something that just looks good. As a matter of fact, if it looks too good, I just say I'm not listening. I won't do it.
So is this a bit of a lesson for life? As in, let's say you're Jordan's age,
100%,
and people are like thinking, "Oh, I'll buy a property."
100%.
It's not just buying a property; it's buying the right property.
Yeah.
That's going to be a fit. Like, should you have a model? Like, should you have let's say you want to get.
Yeah.
So let's say you're a young person and you're 21 years old and you're working. So what they're hearing is make sure you value add your income, as in value add who you are over time, and focus on getting an income coming in that's decent. And then building up a little bit of a...
Well, hang on. That's got to be the focus, I think. That's got to be the focus. The property is only a long-termer.
Yeah, that's
Everyone's
what I'm saying.
in it, yeah.
So do something you love, do something you want to do, whatever, and then become great at it.
Yeah.
Then you've got income coming in and you get a little bit of
an
amount, so $100,000 or whatever you want to aim for. And then...
okay, stop right there.
Yeah.
So that should already have a plan.
That's what I'm saying.
That should have a plan. So you should be saying, okay, here's my job. Here's how I can increase my income. Like I did a plan for Jackson. And if you look at that plan over 10 years, it's two specific lines that run together. One is income. You've got to get from here to here to here to here to here over time. So you don't look at the last one because it's too intimidating, but here's your goal over 5. And when you've done that, you will have saved this, so you buy that. Then when you will have done that, you will have saved this, you buy that. You will have done this.
Right. So
it's simple. It should be simple. It should be simple because otherwise it's too complicated. What do I do with this? I don't know. And you'll spend it along the way. So if you've got a goal for it, then you're always pushing towards it. You get to that goal, boom, money goes into an asset. Don't have to think about it. That will pay for itself. Rent will come in. Now, again, back to the inflationary pressure there, you've got to remember rates are going to go up but it's okay because so will rents go up. Now you're locked into a lease, but you're only in for 12 months. So
it's true. I'm renting now, and the owners wanted to put it up $500 a week or something, and I was like, "Oh, that's a lot, just for average house."
Yeah.
And but that you're right.
Yeah,
they said, "Oh no, interest rate's gone up, so you need to pay more."
Yeah. So that's the thing.
I don't know if it works like that.
Yeah, I was like, "Oh, I can't be bothered moving out. That's fun."
Well, unfortunately,
I don't know if they can do that.
No,
you can't
not
have a
with the lease
substantial
fee.
increase of $500.
No, they did, but it came down a bit. The property manager said, "Oh, maybe it's here," and I was like, "Oh, I don't really care. Just we're not moving anyway." So, so can I go on this?
Yeah.
So when they've got let's say their target is to save $30,000 from their income.
Yep.
At this point, blah 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 blah, and they can pretty much break that down. How much they're going to save? Should they have a model? So they say, I'm going to buy. They research the market. I'm going to buy a property in East Gosford because it's becoming popular. It's this and that. So they should really understand what they do from there, not just I'm going to go out and buy a property in the country.
Yeah, no.
Or property in
they've got to
Tasmania.
know it. We only hit what we aim for.
Yeah.
What's better, capital growth or yield?
Depends on your stage in life.
Depends on your income as well.
Not really. I think it. No, not really. No, I don't think so. I think it just depends on your stage in life. I mean, if you are wanting to ease back and not do as much work, then yield is key.
Do you prefer buying in blue chip suburbs over?
I think what Jordan's asking is like country properties that have 10% return, little house,
but don't grow
not
along.
commercial stuff.
So think about why that is. Because
we spoke about this. Yeah,
your tenant can't afford to buy it. So, we did. So, let me
go over it again.
Let me give that loose.
Because I said to Steve, I'd say the question because I've got those two houses in the Hunter Valley, and then I've got the apartments in Terrigal and Foka, and I said to him, "Am I better off buying like 5 more properties out in like the Hunt Valley that have they're $300,000 and they have a $480 a week rent, and I just set and forget it? I'd never think about it again. At the end of each year, it's got $10,000 in the bank account after paying all the fees. Or do I buy the apartment like what I just did in Terrigal? That's a stretch. It's a lot of money for a 1-bedroom apartment, but it's blue chip. It's like where
tell
everybody
people how
wants
much you
to
just
be.
paid $1.2 million for a 1-bedroom apartment.
Yeah.
And the example, and
But
that
because,
example,
because look at the repayments on that is $7,000 per month.
Yeah.
The rent would be $2,000.
Yeah.
So if I rented it, I'd have to have an income that would allow me to add another $5,000 in per month.
Yeah.
So not everybody can do that.
No, that's right.
Is that because Jordan's like when you said go ahead with it? Is it because one he's at the stage where he wants a great home, but two he's got the income to support it?
Well, there's two things. The most important thing is that he wants it, and you don't really want a house in wherever it might be that you're going to put a tenant in, and it's going to, when you get there, it's fallen over, and you don't want to look after it. And in 5 years' time, you're hating every time you've been there, so you just sell it, because these are long-termers. So long as you can afford them, the most important thing is you've got to understand that in everything you do, business, everything, it's going to be 10 times harder than you think. So buying property, it's 10 times harder than you think over time. There's going to be times where you hate it. You don't want them. I remember in my early days, I sold an apartment in Darling Point, and, I don't even need to go through the math. It's stupid, right?
Should have kept it.
I should have kept it. And it was only because I had bad tenant after bad tenant after bad tenant, and I was too young to understand. I just didn't want it, right?
Yeah, you're so right.
Yeah. So the thing about that is that you've got to want the thing, right? And the difference with what Jordan bought is he wants it. He wants to live there, and that's going to be perfect. It seems like a lot now, but it's going to be insignificant in the scheme of things. Like you'll get to the stage where that will be whatever, but you'll still love living there. But every other example you gave me, you weren't living in Orange, you weren't living in wherever, you weren't living there, right? So, and you weren't even going to go there. The simple rule is if you can't drive past it, don't buy it.
Yeah, I was going to say you don't know the market. I bought a place in Tasmania once because I heard it
Well,
was booming.
Yeah.
And everyone's like, "Oh, Tasmania's booming." This is like 20 years ago. And I was like, so I rang a friend of mine who works in real estate down there. I said to her, "Can you find me a house in Tasmania?" So Jamie and I bought it, and we paid $240,000 or something. And then we bought it, and then like 2 years later, we didn't realize it was in a zone where there's cracks in the buildings, like the clay place, clay whatever. So it had these huge cracks. We had to spend tens of thousands fixing it. 12 years later, we sold it for $240,000.
So you think you got to be able to drive past it?
You got to
Oh, that's
know
a
it.
perfect
Well,
example.
Well, we didn't know
drive-
the area. Like,
yeah.
if we knew
Yeah.
the area, we probably wouldn't have bought there.
Yeah.
It's just that we got caught up in the hype. Yeah.
So another question for you, because
But drive past it means know it.
so
Just means really know it. Like I don't drive up here every 2 minutes, but I know it. And there's places that I know what example I gave you before, knowing prices, when I say know it, like I pretty much, but I deal with it every day throughout Sydney because I've got to know the prices, because if someone needs to borrow money, I need to know what that area is, et cetera, et cetera. So my knowledge base around Sydney is pretty good. I sort of know, and Melbourne, it's really good because I've got a lot down there, right? So you've got to know the area, but I don't know Tasmania. I would never buy anything there. So if someone tells me it's the best deal in the world, I just wouldn't even look at it.
Yeah.
I would not even look at it. Queensland, I wouldn't even look at it. I just don't really know it.
So that's my question, because I've got a friend of mine. He's like, stop buying apartments in Terrigal and Avoca. Like, you can't keep all of your eggs in the one basket. I'm like, but I know the market, the apartment market, better than anyone. Yeah. Like, that's what I know.
But what does he do?
He's a real estate agent, but he invests in...
His model is buy the
little cheap ones with cash flow.
Country.
Yeah. But
that's retirement mindset.
I mean, that's his model.
That's his
so
model.
He's decided that's his model. It's a bit like Steve-O was saying, choose a model.
He's got 30 or something. And
but again, that's sort of a bit of retirement mindset, because you're locking away income stream. So he'll probably grow his business, get it to a stage that he can sell it. Now that lump sum pays off all the properties, and now he's got an income stream and he can retire. I never want to retire.
No,
so I don't have that same mindset to go, okay, I need to structure this so I've got this much money out of that business and it'll pay these things off. My model is the other way. Just buy the assets. They look after, everything is siloed for me. So the properties, they look after themselves. So I'll buy, and then I'll decide sell those two, and then there'll be a purpose that I'll use that money for, But
would you pay the others off with the two?
Okay, I was just about to say that. The point is that you've got to be careful with that, because what happens is as interest rates rise, your borrowing power becomes less. So if you've borrowed the money at 3% and now we're at 6%, let's call it, technically your borrowing power is halved. So if you go giving it back to the bank, they won't give it back to you. So you've really got to
better off
think
keeping it there.
Yeah.
Like maybe. Like,
don't-
when I say maybe.
Yeah,
But-
don't put it into the...
rather than give it back.
So in that
keep
case,
using
you'd
it.
sell two. You make $1 million each.
Yeah.
And then you've got $2 million loans here. You offset them.
Yeah.
But you've still got the money to use as an opportunity. Now, I'm saying this, but this is my world, right? I make money on money. I'm not advocating that people do this, because what they'll tend to do, you've got to be careful with the mindset, is that this $2 million that's sitting over here against two, well, if they've got the structure I've said, then they can manage it, right? But let's scale it back to 100,000 each. If they've got 200,000 in the bank, they might just, that's offsetting, they might just spend it. They might buy a car. They might buy things that are unproductive. You have to have the same rule. It's got to make you more money. I only take
So
that
you
money.
really look at money as like a vehicle. Like
all it
you
is.
look at money as
all
the
it
ability to keep leapfrogging and
That's all it is. That's all I look at
making
it as.
it work for you. Yeah.
So I think, how do I take this and make 10%? How do I take that, get 15%? How do I take that and get 18%? And then if I see 20%, I'm not interested, because that's too good a deal to be true. I'm not interested. So I deal very much within little parameters that I've mentally got over time that have made me understand what's a fair and reasonable return relative to the market. As soon as someone says this has got 35% in it, I genuinely don't even listen. I go, thank you very much. I won't even listen. I won't even look at the email.
So I want to talk about a couple of things quickly. You've gone over one, but I'm going to go over it again, because I've had quite a few people challenge me on this. But before I do that, do you have a backstop with your properties? Like, as in, if something happened, you could holiday rent it, or like, do you have anything like that?
They're all like that.
Yeah, okay.
They're all like that. So they're either
because I suppose in the country you couldn't really holiday rent it and stuff like that. Like it's a
if your market changes in the country, and
like if a mining town, like if a mine, like as you see those people get stuck,
dreadful.
Sorry.
No, it's a perfect point. It's dreadful if you're in a situation where the market changes on you. Look at what happened in Western Australian mines. They were getting 20% return on the properties. And I just don't understand how people thought that was a good deal. Like getting 20% for 1 year, that means you've got 1/5 of your money back, and then it stopped, and then they moved, and then the houses became worth about, they went from being 700,000 to 200. For me, that's just insanity. And in that time, I remember in that time where people were saying, this is ridiculous. The banks won't loan me enough money against, they won't gear the 700. Probably because they know it's not worth 700. People are just paying 700 because these ridiculous yields for fly in, fly out.
Yeah.
And then as soon as they went, the properties just went back to being worth 300 grand. You've lost all your money. I just find that insanity. That's not what property is. Property is a long-term investment. Full stop. Anyone who tells me anything different, it's not. It's a long-term investment because there are smarter things to do with your cash that you can make a lot more money on your money than the short-term in property. But long-term, it kills it.
Is property your number one? Like, do you see that as the number one vehicle?
Number one long-termer. It's not that. It's the thing that'll. Property is the thing that'll make you wealthy. Property is not the thing that, for me, that will make you a billionaire. I mean, it has for a lot of people, so I preface that. But for me, I think that businesses will make me more money over time. But property is the safest investment for the average person to just get into, because you start talking about, their business and what they're going to do it's property's just safe. Yeah. Property's safe. But I'll make one point about that, is that you'd be surprised what you can achieve where you are rather than looking outside all the time. Meaning that when I was only thinking the other day, I think you and I were talking about it, the business, one of my main businesses now, what I make a month now was my entire goal. I thought if I can get to that a year, that'd be fantastic. I make that a month. So what that means is that just shows what you can do.
Yeah.
That just shows that you don't set your limit. And something that I heard from you guys the other day, which was, I listened to the podcast, the real estate podcast, which I love, by the way. And the point was that Jordan answered the question of someone wanting to write $1 million. I never think of the money because it's too hard to work in your head. That messes you up. I need to make, $500 an hour? That doesn't make any sense. But if you just do the math on what you have to do to get there and just grow the deals. So for me, I changed what I did. So I went, okay, I've got this now. Okay. And I did that. I literally went, okay, I need to get the hang of this size. So I managed that size, really managed it. And it just became normal to me, like going for a run. Yeah, I got it. My legs don't hurt anymore. I got this. Okay, so now how do I change that model to just do that in a bigger number? Now I get comfortable with that. So that's what I've got to keep reminding myself that I did. So I can keep doing it. I can just move the model. I can move the number because the process is the same. Whether you're selling, 5 houses, whether you're like your real estate podcast was so relevant to even what I do in the fact that you've just got to touch point. And I've got to remind myself of it. From listening to you say it was actually interesting because you go, yeah, I do make this many phone calls. And yeah, I do make this and I do this and I do take the money out of the equation. I don't try and write $1 million or try and write $10 million. I do the process. And the process is, how do I manage enough construction loans? What's the process to make sure that I can look at 20 QS quantity surveys and approve the claims? What are the key ingredient that I don't spend all my day on that? Okay, I've got that sorted now. What is the key ingredient in a deal that I look at? Okay, so what that means is now that I know the key ingredient, if it doesn't fit into 2 or 3 boxes, it's never going to fit. So people spend too much time, like I'm sure with you guys, spend too much time trying to do a deal that's never going to happen. Trying to get a vendor on or trying to get them down in whatever it might be. So for me, I know what deals won't work and I'm brutal. I just say no. But can I show you and can we spend some time? No, we can't. Now that gives me time back because that's all you exchange for money, time. So I learned that, okay, I've got to get this right. I've got it because otherwise I'm running around. Otherwise I'm out of control.
Well, for us in a real estate world, it'd be like dealing with someone who's motivated or not.
Absolutely.
Like, yeah, you're just assessing like we're assessing motivation.
Yeah.
So I say to Jordan all the time, just don't deal with these people. I mean, don't be rude, but just don't deal with the people who are really not going to do anything.
Yeah.
Because you've only got so much time.
You've only got so much time.
Yeah.
And you get a sense. I mean, I guess that's the key to between someone who's good and not. It's how to read the other person.
Yeah.
And when you get that sense of it's just not right, it's not.
Because if you convert that to what you're saying before, you've only got so much time to exchange every day, but that's going to convert into your flow of income.
Yeah.
How much, and that'll affect how much it is.
Yes.
Then your pool of whatever pot of money or whatever it's going to be to invest in other things. So it's all linked together.
It's all linked
so
together.
So your hour that you spend right now with someone is going to be based on 100%. Are they going to do business or not do business? Yeah.
And the point of that's a good point. The point of that is that if you're just running around trying to achieve this over here today, that's as good as it'll ever be. Like my goal was to do X. If I had have just run around and tried to get to that, that's as much as it would have been. Where instead I stopped and went, what's this process? What do I actually do of a day? Let me break this down into the key components. What is the most time consuming? And I'll give you an example of something that I do, and everyone says to me, you're wasting your time. I do all my own cash flows. So I know where every dollar is, right? That takes me 3 or 4 hours every day, cash flows. Oh, you should get someone else to do that. No, I know where everything is. So that's part of my process that I now don't have to think about. Like you said to me once, how do you know you can do the deal? Because I know it. I know it. I know where it's coming from. I know it in my head. I know it because I do those cash flows.
Yeah, because it's very risky business you're in. You might give someone.
Really. It's not. If you know it, it's not.
That's what I'm saying to you though. If you don't know it, if you really don't know exactly what you're lending to, you might lend someone $10 million. You got to get that back with interest.
Well, no, but hang on. You've got to more important than that. I've got to know when I'm getting it back.
Yeah.
So I've got to know I'm getting it back on this day, where else it's going, what I'm going to do with it. So that gets back to the discussion.
Because your money needs to be working for you the whole time.
All the time. So that gets back to the bank thing. That's what they have, this spare money. They then put into bonds, so they've got some sort of a yield on it. Then they find that they've got to sell the bonds because they have a run on them, et cetera, et cetera. But again, it's cash flow management. You've got to be able to cash flow and manage that every dollar is constantly out, more so. Like more than the money you have has got to be committed.
Can I ask you this? I really want to ask you about your lifestyle, but we'll do that in a sec. But
you know my lifestyle.
No, I know, but I want people to. I want to go into it a little bit. But so let's say not everybody's going to own a business. So let's say somebody's working in your company or any company, and they're on a fixed wage.
Yep.
So what I'm hearing is you can do that if they love it and that's 100%. What they want to do. And then, like for instance, Ash, who works with us, she gets paid decent money, but she's happy doing that. You know, she doesn't want to put everything on the line and open a business and all this sort of stuff. Yeah, she's great. So what I'm hearing is value add what you do, and move up. Like become so valuable, you're going to get paid more naturally.
You're going to get paid more than you think you would ever get an increase for if you just put in 10 times more than where you are.
Yeah, that's
just
right.
Just put in, and people will notice, and you become invaluable.
Because where do you find that person? Yeah, but you need to keep your living expenses the same. So when you're earning more money, what I'm hearing is because if you don't, because your business can be great and it also can be terrible. So like, there's no magical rainbow owning a business. It can send you the other way as well.
100%.
So there is security in having a job that you work within a company. But I'm hearing like value add what you do, increase your value, and then you're going to get paid more.
Yep.
Work your way up or whatever it is going to be, but live moderately. So when you have extra money, you can invest that.
Yeah.
And then that extra bit will set you up later in life.
For sure.
With this long-term property view or whatever it is.
For sure. The thing you have to understand that's really important to understand is that what you save when you make, 20 grand a year is the same percentage you'll save when you're making 10 million a year.
Yeah.
It doesn't change. So the person who can't live on X, they won't be able to live on 10 million. And people think, oh, that's crazy. I'm telling you that if you don't have a discipline, well, I had a question. That question was along those lines.
Don't do that yet.
No, I won't. But it was about savings. And it was the fact that we'll answer the question because it covers.
I want to go into that.
Okay, it really covers that. But the key is that you've got to be disciplined at home. and I'm disciplined at home. Like my living expenses at home are quite controlled. I know
Well,
what
this is
they
where
are.
I was going to go to. So you have a great
I'm
watch
tight.
collection.
I'm
Yeah,
tight.
yeah. I know. We wasted a little bit of money recently. I've never heard anyone go on about it so much. I'm like, oh, who cares? And you're like, oh, I'm not in the business of wasting money. Anyway, it was only a couple of grand, but he was like, I was like, wow. I said, are you okay? And he's like, I'm just not interested in wasting money. Blah blah blah. Anyway, so but that's good. That's the sort of money guy you want, isn't it?
Only mates can talk to you.
So
like this, by the
you
way.
have a very let's talk about your watch collection,
Yep.
and they're very expensive. When do you buy one of those then? Like, because not many people go out and buy those types of watches, and you have many. Like you're saying you live moderately, but when do you buy a watch? Like, is it from a chunk of bonus, or is it
No,
from
it's achieving a goal.
Yeah.
But
when's
that's
the
how I
right
reward
time?
myself.
Or
It's got to be. That can't be a stretch. That's just.
Let's talk about brands. All right. So you wear Louis Vuitton loafers.
They're comfortable.
Yeah, I know, but they're
it gives me a
expensive.
hard time about my
But
shoes.
I'm talking about the amount of money, because a lot of women will go out and buy handbags.
Yeah.
All right. So they'll have 10 grand in their bank account. They'll go and buy an 8 grand handbag.
Yeah.
Okay.
Well,
so
some of the good brand ones go up in value.
some of them
Hermes
do.
ones go up
But
in
when
value.
is the right time to buy this sort of stuff? So do you put? I'm just interested.
You don't spend 10 grand on a handbag when you've got 10 grand in the bank.
Right.
Right. So that's definitely not what you do. It's got to be just something that you've worked towards. I put it away.
I was going to say, do you have another account
I do.
where you might put
Yeah, I'm pathetic.
$200
Yeah,
a week away
I'm
in there,
pathetic,
but
yeah.
that's your
Yeah.
reward account?
Yeah.
Yeah.
I went to Europe with my daughter, and like recently, because she lives in London, I save for it. I put it away. I go, okay, I'm going to spend this much, because I don't want to have to. There's one thing about holidays and things like that. I don't want to punish myself on a holiday. I'm not flying economy. I'm not, they're pretty good holidays. So I want to make sure that I'm not saying, oh, I don't have the money on my credit card. You get to somewhere and you go, oh, I can't buy that, because I want to be organised. So I like being organised.
So you do
You might
that
have noticed
because
I like being organised.
You're one of the most organised people I've ever met. But it's like drives me nuts. But but do you have what is that like? You're doing that because that's just your holiday account.
Yeah,
it
don't have
doesn't
to think
affect
about it.
anything else there. You're not taking anything from your working money.
I'll tell you what I actually did there. I sent her the money to a London account that she's got. I didn't even just put it there, put it there, put it there, put it there. Literally landed, grabbed the debit card.
Is that because it doesn't affect your other flow of money that's
Yeah,
going
no,
on in your world?
Too many people I think too many people just take out of one pool and kid themselves how much is in there. There's only so much in there. You can't allocate it 15 times. So why not just break it up? And then you don't have to think about it in your head. So then when I get there, I get the card, and when I want to buy, I bought a suitcase because I thought I needed a suitcase. I did need a suitcase. I went, oh, that's nice. I'll buy that suitcase. And she rings me. So my daughter's very, careful with money. She's an accountant. She rings me. She goes, Dad, you just spent X. Anyway, I wasn't thinking. I bought it in pounds, and obviously it was double. But it was an expensive bag. I didn't really need this expensive bag because it was just to put clothes in. But my point is that I didn't have to worry about it. It's not like we go, oh, let's go out to this nice restaurant, and I've got to think, oh, hang on, I don't have enough money, or my credit card's full, or what. I don't want to be thinking like that. I just want to be able to go. So
you don't just leave a big pool of money and just take whatever, like a washing machine.
Yeah,
You're like,
but that's why you asked me how much money do I have in my personal account. I don't know, $5 grand. What do I need it for?
So what's should someone's? I got two questions for you. So let's take Ash as an example,
Yeah.
and quickly answer this because we know we spoke about it, but I reckon everybody's thinking the same thing because Ash obviously has fixed income.
Yep.
Her interest rates are going up.
Yep.
I said to her, change it to interest only. She goes, you can't do that. No, you've always got to pay your principal and interest. You just got to get your house and pay it down. And I'm like,
She
no.
rang me and asked me
Did
to
she?
see it. Yeah.
There you go. And what did you say?
Interest only.
Yeah.
Like in that instance, I mean, your principal place of residence, you do ideally want to pay off, so it's different. But if you can't afford it, as we've just discussed, I mean, this is not advice, right? Because everybody is in a different position, a different situation. But the property only works over the term. It doesn't work today. It doesn't, it's long term. So you have to hold it. Ideally, you have to try and hold it. So if that means reducing your payments, then that's what you do. However, what I would do in that situation, if I really could afford principal and interest and I went to interest only, I'd allocate the principal to something else so it made me money.
So let's say the one that I just bought, I could pay principal and interest, no problem. But should I, or should I just pay interest only?
In your instance, you'd pay, I think, in your instance, I'd pay interest only. And then you'd do what we've discussed.
Use the principal to buy something else.
Buy something else. And then down the track, these will all go up in value and you'll sell the last one and it'll pay 2 of them off in 10 years' time.
So you say
don't pay it off with your own money, because you've got to let the population. I think I described it a little differently to that, but you've got to let the population pay the asset off for you.
So are you talking about because it's going to be 2.4 million one day?
Of course. Yeah, so if you've got 3 of them, if you've got one and you own it and it's $1 million and you paid it off, you've got 1. If you've got 3 of them,
That's me.
if you've got 3 of them, you got, they've gone up to 2.4, you've got, the debt's only the $1 million. And you've got 6 points.
Steve said something really good to me the other day. He said, you pay off debt with debt. And I loved that. He said, this whole buy one house, spend 30 years paying it off isn't the game. Like he said, you buy one and then you buy 5 investment properties and then they all grow up. You sell your 3 investment properties, keep 2 and pay off your principal.
Yeah. I don't know what it is, but I just like no one being able to come and take anything. I like debt.
But that's a good point.
Debt spins me out.
No, but that's a good point,
like
because
no debt.
You're talking about on your principal place of residence. Okay,
Yeah.
So that's different, because when they're too much of a stretch, and that's what we were talking about before with inflation, and you watch, and it kills me. Like I watch the news and I feel so sorry for the people who have bought these houses. They're struggling to pay for grocery. Honestly, it kills me, because they're not financially literate in most cases. They've been talked into the fact that they need this home. They've been talked into the fact that they can afford it by, their broker and and they're at such a stretch, and they've not thought about interest rates are going to get to 6-7%. They've not thought about what they've done. That's who I feel sorry for. So that's when debt is bad, really, really, really bad. You need that to be controlled, comfortable. You don't want to be walking home of a night thinking, I can't afford to pay the kids' school fees. Like that's killer. Just live a little more simply in your primary place of residence, and then stretch outside it. You can make a lot of money outside it, but the problem with that is everything's imploding. Your mindset is imploding. The asset is really, when you're in that sort of mortgage belt, your buyer is another mortgage belt buyer, so you struggle to get out. There's nothing going on here that's worthwhile. Nothing. There's no part of that life that's good. You'd be stressed every day. You'd die young. And even if you can just pay that down, what have you got? You've got a house in the burbs. You need to keep that simple, and then buy the other things.
Would you rent to get started? Like let's say people are in a tricky situation.
Yeah, I would.
Would you go rent?
I would.
Get rid of your house?
I would.
Go rent and then buy an investment property or 2 over time?
I would, but I'd do the math on it. So, for example, the rent versus buy, and we had this conversation on the rent versus buy thing. There's tipping point as to where it works. So, in the cheaper areas, like we're talking about, in Bathurst or where, Orange, the yields are really strong. Well, then it's not worth renting, because you're paying more in rent than you would be in interest, right? So you've got to see, where's my tipping point? Where is that tipping point?
I see.
Yeah. So if for example, we're talking about a $2 million
your rent might be as much as a mortgage.
Yeah.
More.
And then at least you're still paying. If the rent and the mortgage are the same, then the only difference is finding the deposit, because the asset will creep up over time. But think about that. Let's take that. That's a good point. Take that as an example. If you rent, it's like paying interest, isn't it? If you pay interest over here, which is like rent, when your lease runs out, you hand the house back to the owner. When your term runs out or whatever, you've at least hopefully had some capital gain. So if they're equal, you're better off to buy, right?
Better off to buy and rent.
Yeah. But
even if it's interest only.
Even if it's interest only. But for example, your place that you're talking about, the difference is you've got to get in and you've got to own it because you want it, right? But in that instance, you're better off to pay $500 a week rent and take
Well,
it.
that's what I
and
pay
invest it.
for an identical apartment across
Yeah.
the road. It cost me
But
$2,000.
the reason
a
you
month.
bought that, George,
Yeah.
is that
No,
there's
lots of
three-
different
there's three
reasons.
Integral, not
It's-
even. There's two Integral like yours.
I've wanted to buy it since they were built.
yeah,
that exact
it's a
apartment.
stretch because
Yeah.
it's going to serve you long term, isn't it?
Yeah.
yeah.
I bought
You
a house off you
Yeah,
because I always wanted that house.
yeah.
There was no logical reason for it. I bought that house,
Mm.
that one that
It was a
because
very good buy too.
yeah, it was a very good
Now
buy.
I'm looking,
It was a very
I
good
should
buy.
have bought it myself. Probably
But-
made $3 million in a year.
But the point is that I wanted that house.
Yeah.
I'd walking past it and I went, I've always wanted to buy that house.
Mm.
I rang Matt, with the bloke sell it? Yeah. And bought it. So, but that's the point. I wanted that house. Now, that's what an investment also, for me, I like to like them. I don't just want to own,
Yeah.
a whole lot of stuff in
Yeah.
Orange that I'm never going to go to, or in Bathurst where I'm going to get a good yield.
Mm.
Okay. So back to the point of where we started out, I think that you've just got to hold the assets. If you're in there, you've got to sort of hold the assets,
Mm.
or you've got to sort of be brutally honest with yourself. If the thing is never going to go up in value, then and you can get out, then maybe you get out and reassess that. But that's a lot easier said than done. You've got to remember you've got a wife, kids. Most of these house and land packages, that's a family living there. That's their home. The kids don't know. That's their friends. So people say, I heard some advice the other day where someone was saying, just sell the house. People don't like doing that.
Yeah, for sure.
So in that instance, what's going to work is time. Time is going to be your benefit. So you've got to be able to hold the asset.
It sounds like setting yourself up so you can use time to your advantage, even if it's interest only.
Yeah.
To get to it might be the same as rent. Can we end on this question that we had about a 55-year-old?
Yep.
Do
you want me to read it out, Steve?
Yeah,
or do you want
please.
me-
Or Jackson can read it.
I'm not gonna.
Get Jack to read it.
Well-
Jackson has not contributed to this podcast at all today.
So
He's probably bored out of his mind.
nah, it's interesting.
No? Yeah?
It's good.
Okay. What have we been saying?
Money, 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 money.
He's probably been on Snapchat over there.
Yeah, what's on TikTok?
While you're getting that up, Steve, for somebody
There you go, Jackson.
for somebody
sorry.
that earns say $1,000 a week, how would that budgeting look?
And if you treat money like that with that attitude, I won't be speaking to you. Sorry.
You know how you said that you carve up everything? Like
Yep.
I'm sure you invest 20% or 30%. You've got a fixed amount for living expenses. For somebody that earn $1,000 a week, how much should they be living on, and how much should they be or saving or investing? Is it
If you want to get ahead, I mean,
as much as possible? But I do 50% now, but I always did 30 my entire life, even when my income was nothing.
Yeah.
Always, that was the first thing that went out of my bank account. I've actually been very, very good at saving,
I
but
think that would be a bare minimum.
30% bare minimum.
Bare minimum.
But for somebody that earns $1,000, it's not a lot.
Live simply.
Yeah, live
More
simply.
simpler.
Yeah. That's the key.
Because it's what do you want, a bit of happiness now, or do you want to be satisfied in life? So the problem is that $1,000 a week, with all due respect, is not going to make you happy in the long term. So just take a bit of pain now. Save more, invest it, do the right things, because it comes at you at a rapid rate of knots in time. But everyone who complains that I don't earn enough now, they're the person who, when they're making $1 million a year, they'll have nothing left either.
Yeah.
They'll spend it. They just grow their income to it, because it's today's self-satisfaction. You've got to have tomorrow's satisfaction in mind, and just reward yourself today.
Same as your training.
Yeah, 100%.
What's that?
Future.
You
Yeah,
put the
100%.
deposits in today
Yeah.
for down the track.
Yeah, that's
I did 31 minutes on the Stairmaster yesterday. I couldn't do 5 minutes about 10 days ago. And I did 10 extra. I'm doing 10 extra seconds in the ice bath. I'm up to 2 minutes 20.
Can you imagine
Couldn't
the
do 20 seconds the
mindset
other
when
day.
he gets to 29 minutes? You think, I'm doing those other 2 minutes if it kills me.
Yeah, I am.
Like, honestly,
I
it would have been.
was like, I don't care if I die. I'm just going to keep going. I just sweat. The whole thing was wet. The whole Stairmaster was completely wet. Anyway,
I don't think Metz fully realizes who he's dealing with.
No.
He says, just do this.
yeah.
He'll do it until he actually goes, boom. It's much not.
Go, Jackson.
Prior to COVID, I had 25 plus year career as a interior designer, with the last 15 years as a consultant to a developer. In the last 3 years, had to pivot and started doing end of tenancy cleaning and property services, but really hard to get staff here in the UK. So haven't grown as expected. Thankfully, my wife and I recently bought into a estate agency franchise, which was always part of our plan. But this obviously takes time and money to grow, so no income as such just yet. I'm based in Surrey in the UK.
So my advice there was that I think it's fantastic that he's in the same industry. He's had a life's worth of experience leading up to this point. He's learned.
So it's Tara, just texting.
He's learnt what to do and what not to do. In that, I think that sounded like a lot of key man. I don't know a lot more than that, but that sounded like a lot of key man risk working for one developer rather than having multiple developers. So I treat everything in life as a lesson. Everything that's happening, I treat it as a lesson for the future, because it's not going to change my life right now. It's what it's going to be. So I think for him, he's in the perfect situation. He's worked through it. He's seen what not to do. Now he's in the property industry, in the same space, but he'll be able to see from his prior mistakes, the 10,000 hour rule, what to now do to really grow that business. And one thing that I did say to Steve was, just remember, and
you already wrote back to this.
I wrote back in detail. Yeah. What I said to Steve was that just remember that opportunities that you're going to see going forward now, never shy away from them and don't think of the money. He said to me, which was a great point, that's easy to say, but it's hard when you're working out how to put food on the table. And the point is that they're two separate, different things. So I still budget my life. I still budget my home life down to a very tight budget. And he should do that too. That's living expense. But opportunity, he's in property. He's going to see things. Something's going to come up. Never think because he doesn't have the money, he can't find it. There are always people who have the money and will invest in a good deal. All this life's experience, he only needs one good deal, right? That he pulls in 10 investors. He can keep 1% equity in it. You don't need any money in, no money in. Put the deal together. Someone like me, if you and I if I said to you, there's this great deal and we should put money into it, but that's all right, we'd do it.
Oh, we're going to get a space together at one point.
Yeah. But what I'm saying is we'd do that, right? Yeah. And we don't need to, as long as the deal's right, and someone says, oh, I want 5% equity in that deal. Well, you've done the deal, that's right. No problem, you can have 5% equity. What that has done is more than the money and more than the deal. That person is now connected with us. So now you got another deal? Okay, well, we've got other people. We will grow for them. Sometimes a person doesn't understand what that first deal does. That first deal gets you underway, gets you a reputation, but just always do the right thing by people. Just always do the right thing and don't look out for today's money. Because if you take 1% in that deal that they've given you in free equity and you've bought a building and you've got to manage it and it's all hard and it's this and it's that, that's the catalyst for 10.
Yeah.
And the next time you can ask for 5% equity. The next time you can structure the deal. Now you say, well, I realise that I can get debt to do this. I can actually borrow it. So I only need 3 of those investors. We'll put the deposit down and my part will be the debt. I'll structure the whole deal. Now you still no money in and you've got a business. But it's very dangerous to have the mindset that, oh, this is too tough and I've got to work for the hourly rate. Never, never, never work for the hourly rate.
Or the other side, try and wring everything out of it. And I always say to Jordan, just be easy to deal with.
Yeah.
When you're dealing with people, just be easy to deal with. Don't get walked over, but just be easy to deal with.
100%.
Because like you say, it's the deal today might be set you up for the next 20 years in a million other great deals. So
I had, I had a bit of a disaster recently.
Yeah.
I paid all those costs. My clients didn't pay anything.
I
gave them all the money.
Yeah.
But then they don't have to know about it. They don't have to feel it. They don't have to see it. I just pay it. I go, there we go. It's all done. And they go, fantastic. I paid.
Yeah.
Now, for them, he's great to deal with.
I'll give people a bit of insight. There's some of your investors, it's a private company, and some of your investors, something went sideways, and was it $100,000 or something? And Steve just paid the whole lot. Didn't even though it was a cost that the investment occurred or something or whatever.
Everyone would have chipped in, but then it
responsible.
would have been talking about it and really, why did you mismanage
It's not
it?
the money,
What
it's the
happened?
youngness. Yeah.
But these guys, invest a lot for a long time with him, and obviously relationships more important than that. So it was pretty interesting. I was
So-
on the phone to him that Arvo, and he's like, mate, huge,
Same as that time that you drove that money down to Sydney. You said the wrong thing about a house, and you didn't find out until later.
yeah,
And they had paid a deposit.
Yeah,
you
yeah.
went down and paid it
I did. Yeah.
out of your own money. Yeah.
There's a million things, over the years, but you're right. Be easy to deal with, do the right
Easy
thing.
to deal with, do the right thing. and
Relationship first.
opportunities come.
Yeah.
And again, for Steve, he's learnt so much now. This is the pinnacle of time for him to go, because you got to also understand that if he were 10 years younger, 45, or if he were 15 years younger, 40, people don't take the same, and you don't have the same
true.
attitude. You can't do the same deals.
It's so true.
You're not the same person.
Yeah. Yeah, I mean, we talk about this a bit. Like at 50 now, for me, I'm like, I don't think I could have done half of this stuff earlier because one, I wasn't ready, and two, I just didn't have the depth of experience. Yeah.
I mean, in your instance, I think that I see what you put in and how you've realised, and I still haven't realised it. I get it. I didn't need you were going to say it, so I just thought I'd jump in there. There's that point where you've realised, okay, these key things were so important on the journey, but you didn't realise them then.
I didn't.
But the interesting thing is that without someone like you to tell people that, you just got to do the hard yards, and 15 years has gone, and they go, oh, now I learn it.
Yeah.
To really listen to it from people who have really done it, like this original message from Steve was about finding a mentor. So that's why I said I was happy to help with the little limited things. But a good, not a mentor as such, but a way in which you can contact with people who have been through it and have come out the other side to realise, as you have, to realise what are the key points that really made that work. It's invaluable. You couldn't pay for that.
I say to Jordan all the time, he's going to become way more successful than I'll ever be, because he's got my platform to learn from, and he is. He's applying himself, and that's going to speed it up. But then he's going to shoot right past me.
100%.
I can see that.
My son, my daughter, my kids.
Yeah, you look at Kyle.
Kids,
Kyle's killing it.
Yeah, it's the same thing. They'll be 10 times better than I am, and it's only the nuance of not getting like.
But they've got to be willing and
they've got to be willing,
coachable, hungry. All of this.
The coachable thing is the most important thing. They've got to listen to the bit, because the bits that are so important are the bits that people go, that's nothing, but it's the key.
Yeah, it is.
It's the key.
Thanks, Stevo. That was a long podcast today, but I think we got the great info from Steve as always. So
Pleasure, guys.
yeah, we're looking forward to getting you on again.
No problem.
We might do a Q&A one next time. So if people have questions,
Q&A would be good.
Yeah, I was going to do it today, but I thought I'd rather just let Steve freestyle it today. But I think if people have questions, send them through. We're going to categorise them and file them so we can find them. But if we've missed any...
I actually prefer that, because I like to know what people really want, because most of the time I just think I'm just jabbering on and it's not relevant.
Yeah.
So, I mean, I like it when you guys ask, because I know for Jordan it's relevant,
Yeah. And
So I don't actually mind when you ring me, mate, and ask me questions. No, I'm serious.
I appreciate it. I know you're a busy man.
And it's probably some exciting sort of news. We have a 31-minute platform coming out. You're going to start coaching people in the money area. Well, when I say coaching, sharing your knowledge. You know, it's you can't really give financial advice because of the business that you're in, but that's going to help a lot of people, I think.
Yeah, I mean, I think that it will. I think so, and I enjoy the idea of helping. I enjoy the idea of exactly that, answering questions that people really want the answers to. I mean, I had my son send me some questions on commercial property relating to or versus residential property, and there's all, and you realise that the questions that people want to know, you wouldn't normally sit and talk about.
I don't think a lot of people know.
No.
The people who actually really know about money, they're few and far between.
Yeah.
I think. So we appreciate your time.
Well, I had a chat the other day with a mate of mine who said to me, I said, well, where money came from and the gold standard. He said, what do you mean? And I had to explain what the gold standard was. And I thought everybody knows what that is.
No one knows what it is. Thanks, Steve.
Pleasure. Thanks, guys.